Welcome, dear listeners. My name is Paul Buitink, and today I'm going to talk to someone very special, someone I learned from a lot, George Selgin, director of Cato Center for Monetary and Financial Alternatives and author of many books about money, such as Money, Free and Unfree, and his latest, or one of his latest, called Floored. Hi, George. Great to have you on.
Oh, hi, Paul. Thank you for having me.
So you've been studying monetary systems and money across space and across time. What is the best money you've ever come across in your studies?
Oh, my goodness. Well, I have to give a high rating, if not the highest, to the money I talked about, the coins I talked about in my book, Good Money. Since that's the title of the book, I can hardly leave them out of the answer to such a question. And those were private coins produced during Britain's Industrial Revolution, when the Royal Mint essentially ceased to produce coins for ordinary people, copper coins especially. So these private mints sprung up and filled the breach. And it's quite an interesting episode in the private sector doing something that the government didn't do well, and doing it very well, in fact.
Interesting. And how far away are we from the ideal money at the moment, if you look at the current setup we have?
Pretty far, I'd say. We have obviously very serious problems with our monetary and banking systems, and they're anything but self-regulating, that's for sure. The big debate is about whether they could be self-regulating. Most people don't think so. But I actually believe that the biggest problems we have with money consist of consequences of unwise regulation in the past, and central banks and other financial regulators' efforts to calm financial markets and make them more stable and to prevent crises often consists mainly of attempts to deal with problems that past interventions have helped to create, including weaknesses in the banking system and the consequences of guarantees and excessive risk-taking that they promote and all that. Anyway, mine's a distinctly minority view, but that's how I feel about it. We're a long way anyway from having a financial system that can take care of itself, as some in the past were pretty good at doing.
Yeah, it's interesting because your view is completely counter to the mainstream narrative view that says, look, we need more regulation, Basel 3, 4, Basel infinity. The more regulation, the better. And you're saying, no, the exact opposite. We need less regulation. Do we need regulation at all then in terms of, we need laws, yes, right?
I suspect that we do. Of course, we need laws to enforce contracts and that sort of thing, because it's only through the use of cleverly designed contracts that the private sector is able to create stability when it's given a chance. And to the extent that governments don't enforce private contracts, of course, that solution isn't going to work. So we need that, and we need punishment for fraud. We need a lot of basic laws to have a financial system operate properly. What we don't need are the kinds of interventions that have often occurred in the past that were motivated by one of two things. Either government's own desire to abuse the monetary and banking system for its own fiscal needs. That has been an important historical motivation for government interference with money, going back to the days of the first monopoly mints in ancient times. But the other source of destructive and destabilizing regulation is, of course, pressure from special interest groups, including, of course, the bankers themselves, who lobby for this and that regulation, despite the fact that it will cause problems, because they see that it can benefit their particular institutions. And that is another thing that history has many, many examples of. So when you look closely at regulations, especially ones from the more distant past, you see that they were more often than not even designed with the intent of stabilizing. They were passed, put into place because of special interest pressures, because governments wanted to extract revenue from the financial system. And those regulations led to trouble. Today, the regulations we have, about half of them are the ones that led to trouble in the past, and the other half are regulations that were passed to try to fix the problems from the first round of, or earlier round of regulation, and on we go. I'll just make one example. I know it's a short episode, but in the United States, a notorious example of this was laws against branch banking. Our banks couldn't have branches, except to a very limited extent. State governments generally didn't allow a bank to have more than one place of business. Some states allowed more than one, but there was no question of banks being able to have interstate business, business across state lines or nationwide. And the United States was unusual. Other countries did allow their banks to have branches all over the place. Canada is a good example. Well, that single regulatory restriction, which persisted to some extent into the 1990s, and even a little bit beyond, that single regulatory form of regulatory interference was a major cause of financial instability in the United States, made for all kinds of weaknesses. And it also gave rise to other regulatory interference that was supposed to fix things, but that didn't deal with the fundamental cause. And those regulations ended up having problems as well. And so that's just an example.
Interesting. Because a lot of commentators say that banks have lobbied in the past for deregulation or less regulation. The famous example is, of course, Glass Steagall. So what do you think of that then? Was it a good thing to end Glass Steagall, or you think that particular type of regulation should have stayed in place?
Well, let me say that the fact that bankers lobby for something doesn't necessarily mean it's bad, that you shouldn't do it. So sometimes bankers lobby for regulations that are good. Sometimes they lobby against regulations that are bad. So I don't want to suggest that what bankers favor, and we should remember that it's not always the case. It's usually the case that different bankers favor different things. It's not always the case that the bankers are wrong. With regard to Glass Steagall, though, I would say the bankers here were quite right. The Glass Steagall Act, as passed in the 1930s, originally as part of the 1933 Banking Act, most of it, the main part people think of today is the part that separated investment from commercial banking. That never was very well justified. The evidence from the 1930s shows that the involvement of commercial banks in investment banking had very little to do with the problems of the 1930s. Most of the banks that failed back then had no investment underwriting activities, none at all. So there was never any good reason for that law. There were special interests who lobbied for it, including those freestanding investment banks that became so notoriously unsound in the 2008 crisis. When there was some rollback of Glass Steagall just prior to that crisis, lots of people pointed a finger at it and say, that's it. That's what caused the 2008 crisis, deregulation. And I'm afraid that their claims are just as unfounded as the claims made in the 1930s about the role of investment banking and the general banking ills. So there's a lot of myth about which regulations do and which regulations don't cause trouble.
Yeah, interesting. A very important law was, of course, the Federal Reserve Act in 1913. Looking back, do you think the Fed should have never been conceived of in the first place?
Well, yes, I do think it was a bad idea. I've written an article, a long article about it, which is in the book Money Free and Unfree, called New York's Bank. And what I do there is to point out that the Fed was a compromise. The Federal Reserve Act was a compromise. And it was a compromise that very much served the interests of a small group of powerful New York banks. They did not want branch banking, which, as I said earlier, would have been a very desirable reform. And in fact, had we instituted branch banking 130 years ago or so, I think we would have avoided most of the crises that led to the passage of the Federal Reserve Act. So what I point out in that essay is that we had a better deregulatory solution, for which Canada's banking system at the time offered an extremely good model. And everybody knew it back then. But politics and special interest lobbying ultimately gave us this alternative of the Federal Reserve Act, which, of course, in its first 20 years went on to show that it was hardly the solution to crises that it was supposed to be. And I would argue that its performance ever since has not been particularly good either. Obviously, it's had some times when it's done good things. But on the whole, if we could have done something else back in 1913, and there was an alternative, I think we would have avoided, if we followed that alternative, we would have avoided a lot of financial instability.
Yeah, if only Jekyll Island didn't take place.
Well, yeah, depending, of course, on what was done instead. I wouldn't put it past them to have come up with something even worse than the Fed, but there were better alternatives as well.
So if you would be chairman of the Fed, would you then try to dismantle it? A bit like Ron Paul, of course, was in favor of ending the Fed. Would that be your purpose if you would be appointed?
Well, not exactly. End the Fed is a nice sounding slogan, but it's not so easy to do today. One thing that people overlook, and oddly enough, Ron Paul might be the first to appreciate this if it were pointed out to him, I don't know. But back in 1913, you didn't have a dollar that was fundamentally just paper. You had a gold standard. So you could get rid of the Fed then and for 20 years afterwards, and you'd still have a well-defined, meaningful dollar unit. Today, gold is no longer, of course, part of the picture.
Well, it is still an asset on the balance sheet of many central banks, including the Fed.
Yes, but so is their building and other physical assets.
Yeah, but it's not a coincidence that it's everywhere on the balance sheet, and even developing nations are actually accumulating.
Sure. Nevertheless, the fact remains that the dollar is fundamentally fiat money. And if there were no Federal Reserve, well, the question arises, how can you get rid of the Fed and not get rid of the dollar, or still have the dollar that everybody's using? So talking about ending the Fed today, you have to have some plan for maintaining and ultimately, of course, ideally improving the integrity of the dollar. Unless, of course, you want everybody to just, everybody who's using dollars to just suffer the consequences of an very uncertain fate. So,
but that's why we appoint you, because you've studied history. You know about all the alternatives, so you can come up with a plan.
I do have a plan. I would have a plan if I were in charge of the Fed and had all the power in my hands to change it as I wished. But I would change it. I would change it not by doing away with the Federal Reserve completely, but by turning it into what I've sometimes called a night watchman Fed, that would solely be responsible for adjusting, ideally according to a computer algorithm, adjusting and maintaining the supply of basic dollars that serve as reserves for the banking system, and do so in a way that promotes stability. the idea here is to allow people who hold dollars to continue to have something that will be reasonably reliable while getting rid of the Fed's discretionary powers, and of course allowing people to use alternatives to the dollar. The thing I don't want to endorse is a plan of, let's say, going to the Federal Reserve, building one overnight with bulldozers and bulldozing it down and not letting anyone come to work, and then waiting to see what happens the next day.
Yeah, that would be highly irresponsible.
That kind of ending of the Fed, I can't go with that. So whenever people say, "Why don't we just end the Fed?" I say, "Well, you tell me exactly what you mean, and maybe it'll be okay." But I'm not for any sort of ending.
No, you're for a peaceful evolution of what we currently have. Yeah, but
I don't want to hurt anybody.
No, but if you say stability, if that's the goal, you're talking about price stability, or are you also what kind of stability do you mean? Because every politician has his own definition of stability.
Well, I am part of the market monetarist camp. I think that the right criterion of a stable monetary system is not stability of some price index, but stability of some measure of aggregate spending in the economy, like NGDP, nominal gross domestic product. I should point out that I have had this view since before there was a market monetarist revolution. It's in my 1988 book. And it was a view held by many, many economists in the past, including Hayek at some point. And so I think a good monetary system should have that property. That doesn't make me necessarily an advocate of planning, of course. But I think when we look at any monetary system and try to form some opinion of it, we need to have a theoretical ideal of what a good monetary system should be able to do. Now, of course, if we have a fiat money like the dollar, it does have to be artificially controlled to achieve that end, because there's nothing natural in a fiat money system. There's no natural limit that's going to cause the supply to adjust correctly. In contrast, take something like gold. A gold standard does harbor some automatic mechanisms that put some limits on how much variation of NGDP would take place under it. Those limits aren't ideal, but there's something. With fiat money, you've got to concoct the whole thing to make it.
Yeah, you got to tame the beast.
Yes.
Yeah, okay, interesting. So on the one hand, are you very much in favor of free markets, but then you say, since we have this construct anyway, we might as well try to tame it in such a way that it brings the best out of it and tries to help the economy as much as it can.
Yes, I think that's fair enough. Remember, I'm taking for granted the fact that many, many, many people hold dollars, not just Americans, but all over the world. They're dependent on this currency, and it's retaining some reasonable stability in the future. Because for better or for worse, even now with our flawed Federal Reserve System, the dollar is considered one of the better currencies in the world, not ideal. So my concern is that whatever plan we pursue and however radical we're willing to be, it mustn't be something that leaves all of these people in the lurch. It must be something that tries to do something to preserve the currency that they're holding and make sure it doesn't simply become utterly unreliable, let alone worthless. So that's my concern. It's ultimately a welfare concern. It's not that I think the dollar is sacrosanct. It's not that I don't believe in choice in currency and hope that other rival currencies can compete with the dollar. I just feel that because of the dollar's incumbency and importance, nothing should be done that would suddenly cause it to become utterly unreliable. That would be a great tragedy for the people holding dollars.
But it feels a bit like Stockholm syndrome, or at least we're held hostage by the dollar system. And we
Yes, well, we are held hostage. You know, it's the nature of a medium of exchange is that if it does succeed, it becomes very well entrenched, and it's not the fault of all the people holding dollars that through all kinds of historical contingencies, they find themselves relying heavily on this particular monetary unit. We certainly don't want them to suffer from attempts to try to improve things and give them better monetary alternatives. I think we should at least include among these possible alternatives the dollar itself. That is, we should say to people not, well, your dollars are no good anymore, try something else, but we're going to try to fix the dollar as best as we can, and then if you want to, you can try, you should try something else as well. It's up to you. I want perfect free choice in currency, but I don't want to deprive people of the currency that they're already using and simply take that option completely off the table.
Fair enough. Do you think the dollar is possibly on a path of self-destruction with current policies?
No, not necessarily. I think for the immediate future, I don't see a risk of very high inflation. And that's because we're dealing with the circumstances right now where the demand for dollars is as extreme as the supply. So we're seeing both go up a lot. Now, of course, at some point, if things stabilize, and they will, then the Federal Reserve will have to take steps to constrain the growth of dollars again in order that inflation should not become a problem. My fears concern the longer run situation where the pressure from a heavily indebted government on the Fed to not raise interest rates so much, which would raise the cost of servicing the debt, that fiscal pressure is going to be very, very great. And so the test is going to be whether the Federal Reserve authorities are able, in fact, to do their job of raising interest rates and otherwise taking such steps as to prevent inflation from emerging. And I think the presently constituted Fed probably would do that, but I don't know whether some future different Federal Reserve can be trusted to face that pressure and resist it.
You need a new Paul Volcker at some point.
We might need a new Paul Volcker. That's exactly a good way to put it. We shall see, but I'm sure we will have some future Richard Nixons, etc., pushing for lower interest rates.
They can always call George Selgin then as a backup. And what do you think is what do you think is the best or the most likely contender to replace the dollar in the future? Do you think China with the yuan can play that role at some point if their economy keeps on growing?
I have grave doubts about that. I really do. For one thing, yuan is not all that well established as a currency internationally. There's still some prospects for instability in the Chinese economy. And finally, in these days of digitization, I think people would be a little bit leery of depending on a currency that is so associated with a government that's inclined to snoop. Not that our own government doesn't do a lot of snooping as well.
Exactly.
So I think that for the foreseeable future, the dollar does not seem to have very many any real strong rivals, and that's in some ways that's one of the things that's saving us right now. It's because of that we can have such an aggressive response to the current crises, and have a demand for dollars that is able to sustain it. But I hasten to say that my optimism about the dollar's survival is heavily predicated on the very, very poor quality of alternative currencies, whether for political or for other reasons. So we're going to be stuck with dollars for a long time.
Yeah, and of course, most currencies are, or almost all are national currencies. Of course, there's a few supranational currencies such as the euro, which in itself is not a very successful experiment at the moment.
No.
But there's of course also more and more the desire for virtual currencies that are not beholden to country borders, because for many young people who grew up with the internet, they are less interested in trying to maintain these older constructs like money should be in one country, and because they interact on the internet, they send messages across the world, they need to have possibly also some means of payments that they can use across the world on the internet. Of course, we've seen Bitcoin, quite a few other cryptocurrencies. You've been following those as well. Do you think in the future world there might be a bigger role for them available too?
I'm sure there'll be a bigger role. There's no question about that. For some of them, of course, probably including Bitcoin. But it'll be, in my opinion, it'll be a niche role, a fairly limited role, and it will include international payments of various kinds, and remittances especially, where some of these currencies have already been quite popular. And it will also include an important role as a medium for more private payments, of course, not perfectly private, but more private than transactions using ordinary bank accounts and established national currencies. What I am doubtful about, and I have been for some time, is the prospects for any of these currencies becoming a dominant domestic currency in any major country. I think that's highly unlikely for all kinds of reasons, but mainly because even if you have a currency that is a national currency that's performing very badly, even if you have a hyperinflation, of course we've seen examples of this recently, the fact is that in those cases, people will mainly switch, not entirely, but they'll mainly switch to a currency like the dollar before, rather than adopt a cryptocurrency or private digital currency to any great degree. There'll be some substitution into private stuff, but mostly people look for the next best national currency.
Yeah, and do you also think that governments, they're not going to allow a digital currency or cryptocurrency? I think you call it synthetic commodity money. Do you think governments will not allow it to become big anyway? And then they try, for example, in Holland, they stifle it with regulation. It's almost impossible to have a Bitcoin startup because you have to spend 20,000 a year just for regulation purposes, even if you only have one employee and hardly have any turnover.
I think that's absolutely correct. I think that as a general rule, you can count on the following: that governments will tolerate private currencies exactly up to the point where the currencies start to look very popular and have a chance threatening the dominant status of the official currency. If that happens, you can count on governments to start putting the pressure on whenever they feel threatened. We've seen this to, I believe, a somewhat hysterical extent in the case of Facebook's currency venture, the Libra, which I think never really posed any serious threat, and yet the perception that it somehow might created an incredible backlash from government. So And there are other examples I could cite as well. But when I argue that I don't think any cryptocurrency is likely to take over, I'm usually abstracting from this government factor, which is another factor that I think is clearly important. I believe, though, that even in its absence, the hurdles that something like Bitcoin would have to overcome in order to become more popular than the dollar, say, in the United States, are tremendous. By the way, people have asked me if the dollar were to hyperinflate itself, if we started to look like Venezuela, what currency would I switch to?
You said Canadian dollar, right?
Yeah, Canadian dollar, yeah. It would be a not very disruptive switch in unit of account. The Bank of Canada actually has a pretty good reputation. I doubt, though I can't be sure, that they would follow us along on a hyperinflationary trajectory. Although it would be difficult, they'd have to resist the appreciation of their currency that would be trouble for trade. Nevertheless, that would be my guess on the easiest transition for us to make.
Interesting. Yeah. I used to live in Ecuador, and there we used the US dollar as well.
Yes, you do. Yes, you do.
And there's always the debate there whether they need to continue with that or whether they should switch to a new local currency. But the population has very clear in mind what happened in the past, so there's absolutely no support for that.
Yes, let's hope the history books keep the students informed of that in the future. Because what happens is everybody forgets. Everybody forgets. In this country, everybody forgets that we had high inflation. And they don't know what inflation is.
No, so but soon they will find out.
Yeah, that's what I'm afraid of. Not soon, though.
No, yeah, that's the debate. So when do you think inflation will kick in? I'm not going to pin you down on it.
I don't know that it will kick in. But I think that it'll be another year or two before we have to really start worrying about it. And when I say worrying about it, I mean we have to be on guard about it. Not that it's definitely going to happen, but we have to be on guard for it.
Yeah. One final topic I would like to address, if okay with you. You mentioned Libra, and Libra, of course, led to central banks waking up and really now switching to a higher gear to develop their own currency. Digital currencies, definitely, of course, not cryptocurrencies, just a digital central coin. But especially the People's Bank of China seems to be leading the pack because they've already started experimenting with their digital currency electronic payment. What do you think of these initiatives by central banks? Do you think they're going to take off, and to what extent is that a threat for the commercial banks?
Those are very good questions, and I'm of two minds really about this. On the one hand, I think that when we speak about these central bank digital currencies, we have to be disambiguate a little bit. We could be talking about person-to-person digital currencies that are substitutes mainly for paper currency, for notes. Or we could be talking about retail deposits offered by central banks. Or we could be talking about something that's a little bit of both. I think insofar as central banks are contemplating just offering digital circulating media that is not really a substitute for ordinary accounts, bank accounts, I can understand why you would want them to do that. Here's where my two minds come into play. We have allowed governments to monopolize hand-to-hand currency for the most part. And not surprisingly, we now have very old-fashioned hand-to-hand currency. It's antiquated stuff. And so the question is, okay, in a world of monopoly, do you want the monopolist to have, improve its technology and keep up with the times, etc.? And part of me wants to say, well, of course, otherwise we just have that much more inefficient a monopoly system. We shouldn't have to be, suppose the government had taken over mail delivery. Suppose the government had taken over mass transit and we still were using stagecoaches. We'd say, come on, let's have some, internal combustion vehicles, if not electric ones. In the same way, I feel that we should not want to insist that central banks don't produce better alternatives to paper money. However, I also don't want them doing anything that's going to allow them to compete head on with commercial banks, because that could mean they end up making further encroachments on the private money creation business, and eventually could completely supplant commercial banks as money creators. So all our money has to come from the central bank, and I don't like that. My ideal solution, of course, as you know, has always been that what we should do is get rid of the monopoly of circulating currency that central banks enjoy and let the commercial banks once again provide hand-to-hand money, as they did in many places very successfully in the 19th and early 20th century.
Yeah, but in that case, the unit of account is still defined by the state.
Yeah, so we don't have to take away the ultimate control of money from the Fed, for example. To allow this, we could have commercial banks issuing hand-to-hand, person-to-person digital monies, right, that could be used to store it on cell phones or whatever. Perfectly possible, just as it would be possible if they wanted to for the banks, if legally allowed, to issue circulating paper notes again.
But on which ledger are these units then stored? Which balance sheet?
The commercial banks.
Yeah, so you would still have a claim on the commercial bank if the commercial bank would go bankrupt.
Claims, yes, yeah, absolutely. Okay. Just like banknotes, old-fashioned banknotes were claims that were redeemable in gold or in the money of a central bank sometimes. So there's no reason for hand-to-hand or person-to-person currency money to be produced by the government only. So I would.
I see like a dilemma. Yeah, it's a dilemma. Yeah, on the one hand, it feels like you ask your master for a different plate of food, because since he's providing you the food, you might want some variation. But ideally, you would like to have pizza delivered.
Yeah, something like that. I think that we in my first best solution, as I said, is let the commercial banks be free to enter the business of supplying person-to-person currency, and they can do it very well. And I don't mean just commercial banks. I should say commercial banks and fintechs and communication companies. So we could all be using, something, our cell phones for hand-to-hand, for person-to-person payments. And that would be the best solution. It would be the most efficient, because even if you let the Fed do something technologically fancy today, it will be another century before they made the next innovation. So what we want is ongoing innovation in the payment space, not occasional innovation. And we want competition to have that. And of course, the more we allow central banks only to innovate, the less competition we have. So the irony is, the more you let central banks innovate, the less innovation you get.
That's very ironic indeed. Yeah. Well, that was very interesting, and you clearly have further opened my mind with some interesting points you made. Any other things you'd like to add to the conversation, or points you want to make?
Oh goodness, I could go on forever about all kinds of things, but I think we've covered a lot of ground. I don't want to wear out your listeners or anything, but I've appreciated being able to do this with you.
Yeah, I very much enjoyed it. Let's do it again in the future.
Okay, Paul.
Okay. Bye, George. Thanks a lot.
Bye-bye.